everyone? Welcome to Let's Talk Markets. I am your host, Pink, here with my co-host, Dave Lauer, and our special guest today, the CEO of Fennel Markets, Daniel Naim. Daniel, how are you doing?
Good. Great to be here. Thanks for having me, Pink.
Dave, are you burning like I am? It's so hot. It is so hot.
I don't know what you guys are talking about. It's gorgeous up here in Canada. All right.
I'm so jealous.
It got a little hot, it like crossed over 80 the other day, and we were like, whew, yeah.
Oh, bless your heart.
Yeah. The smoke's gone. The weather's beautiful. This is why we suffer through the winters, because we should have a tolerable summer. So I cannot complain. I don't have anything to complain about this week. And I've been complaining every week. So let's chalk this one up. No complaints from Dave this week.
I'm literally boiling with jealousy right now from the armpit of America. If my camera's a little shaky, I have a literal industrial fan right out of view because it is just burning hot here. So
it's so funny when you call yourselves the armpit of America in Oklahoma, because being from Jersey, we're the armpit of America.
We'll thumb wrestle you for it. We're the groin of Well, I think Florida's the groin of America, isn't it?
Florida's the land, so definitely it's the groin.
We're the boil on the butt of America.
So they're right. So the butt's smelly, the wang is smelly, the armpits are And California is like the beautiful.
I'm in LA, so I have no idea what you guys are talking.
Exactly.
I've never heard about weather. I don't know when you guys say hot or cold. I'm sorry, but
you guys are like the gorgeous hair of America.
Exactly.
Golden blonde hair.
Like you're the feature of the selfie. Like you're where America zooms in on their selfie.
It's dyed blonde hair. That's all we are. Dyed blonde hair from tip to toe. Head to toe.
Oh jeez, yeah.
Well, what a wonderful segue. But Daniel, why don't you tell us a little bit about Fennel Markets? Because we kind of align with what we're doing over here at Irvine.
Yeah, so Fennel launched a couple months ago. We're a retail brokerage application, so a place to buy and sell stocks. We really were born out of this ethos of transparency and trust in the financial markets. So the brokerage itself doesn't engage with practices like payment for order flow or securities lending. We even give, the optionality to our clients to route orders the way that they want to route them. And more importantly, we spend a lot of time thinking about data and thinking about how can we give power back to the retail investor and the everyday person. And we do that primarily through ESG data and shareholder voting. So, a lot of the data that you have within these large public companies cost millions of dollars every year just to have access to. Things like how much carbon do they emit? How do they pay men and women equally? And so our job here is really to democratize that. And that's kind of what we're all about.
That's amazing. As someone who, where I'm sitting, I came from the depths of Reddit and sort of the GME movement and all of that. But that's everything that we have been looking for as everyday retail investors to accommodate the modern market and to try to meet us where we are as we trade in this new age. We demand transparency. And so that's just awesome. I'm a big fan.
I've been on Reddit since 2012, ever since I came to this country, and I've just been part of that movement. I feel the same way, and that's really what we're trying to do.
That's awesome. Love it.
Yeah, you can see why it's a natural alignment here between Irvine and Fennel, and we've been big fans of you guys since you started. And
likewise, Dave, you're a huge inspiration to us too, and kind of the past few years, what you've been able to do and rally the troops. I think it just speaks volumes, and I think we're one of the people that were inspired by that. So thank you guys.
It's awesome, and I love what you guys are doing for voting, and it's. And trying to get, it's important because, and these numbers better than anyone, but retail does not vote, generally speaking, right? And that's a big problem, especially when you consider the level of ownership that retail has and, the influence that can have on corporate governance and on making, pushing companies to reflect the values of their shareholders. And I think that is, if nothing else comes out of all of this, that should be one of the most important things, is that it is important to be involved. You shouldn't let somebody take your voice away from you, right? And you should let it be heard, and everything in markets should work to facilitate that rather than to block that. And I just think it's very apropos to the subject matter that at hand that we want to talk about today.
Yeah,
definitely. So, mentioning that everyone is kind of burning except for Dave up there in his nice little comfy nest.
Well, the forests are burning because it's hot and dry. So
that's true. That's true.
The world is burning for sure.
Yeah, it's a balance, right?
Yeah.
But I know down here is just. I went to a concert last week and it was like I had pit tickets and that was a total mistake. It was 109 degrees actual in Dallas. I did leave like before the show ended. It was just too much. I'm not 20 anymore. I can't hang in the mosh pit anymore. But it's been some of the hottest days on record. The last what are we at? Like the last week and a half now, literally since we've been taking record. And so climate change and the way that the SEC has gotten involved in climate change has suddenly become a very hot topic.
Sure has, yeah. And that's right. So, that's why we asked Daniel to join us, because they're very focused on ESG, and it is an important topic, and it's a very controversial rulemaking that's come out of the SEC. So I don't know, Daniel, you want to talk about and introduce the rulemaking?
Yeah. So the rulemaking essentially is, focused on being able to disclose the carbon emissions around companies. I think that's what it, primarily focuses on. And this bill has been trying to be passed for quite some time now. And every time we think it's going to get passed, it gets delayed a couple weeks, it gets delayed a couple months because members from Congress are putting in additional statements, lobbying is happening such that, they're trying to take all the teeth out of the bill. So before it used to be, look, we're going to do scope 1, scope 2, and scope 3. And now they kind of, are trying to phase scope 3 out of there. And for those of you who don't know, scope 1 is like direct emissions. Scope 2 is kind of indirect based on business, like, do I have a fleet of cars? Do I, does that expense fuel, et cetera? Scope 3 is like how much fuel, how much carbon is released from the products that you sell. And so you can imagine like oil companies now are saying, well, we don't want to have to report scope 3 because, and who's probably the most lobbying group in Congress is like, they're like, look, we don't want to have to report scope 3.
Yeah, the most lobbied and the most subsidized. Let's be fair.
I mean, hand in hand, I think they're doing a good job of lobbying.
Those lobbyists, man, they earn their monthly retainers, I gotta say.
Yeah, and so it's interesting because I think we've thought a lot about this at Fennel, which is like it's just data. I don't understand, and these companies, most of them want to report the data. Most of them are already doing so.
Yeah.
And so we really just need a standardized thing from the government to step in here and say, look, carbon is a threat. This carbon emission is a threat to climate change. It has a material impact on the way that these companies do business.
Yeah,
right?
And, I think that's like, we don't even need to talk about climate change, frankly, in this discussion. Yes, these are about climate disclosures, and maybe you believe that humans are causing climate change, and maybe you don't. It doesn't really matter. Like, what matters is that these things are important and they're material to businesses, right?
Yes.
And the SEC is coming in and saying, this is a material risk to businesses.
Yep.
And the entire premise of our securities law framework is that you need to disclose anything material to your business. And then people, investors, can decide based on uniform disclosures whether they want to buy or sell shares in your company.
Yes.
They have legal recourse if you misrepresent those disclosures, if you make mistakes or purposefully mislead people. It's with everything, with any kind of risk, it has to be disclosed. And you said just now, many companies are already disclosing it, right? And other places around the world are passing their laws, right? The EU has passed a framework for climate disclosure, right?
They're far ahead of the curve. The EU they're thinking about this, and I think poor blokes, probably it's because they don't have as much AC as us in the United States.
That's right.
So they have to deal with the heat. I think a little bit more than we do. We can buy industrial fans. God bless America. And I just think that you're absolutely right. Look, there's so many places, like look at PG&E in the past, the risks with the fire in NorCal. Look at companies that are, taking water from water scarce regions or taking lumber products from lumber scarce. Like if I'm an investor, I want to know these things, right? This is a material impact on the way that this company is doing business, and it really doesn't make sense for them not to disclose this stuff.
Yeah, that's right. And so the political trick that's being played here, and let's get to that, right? There's a political trick being played, and the party that is mostly controlled by fossil fuel lobbying and campaign contributions is pushing back hard against these disclosures by trying to say that the SEC is trying to set climate policy.
Right.
That's they think if they can make that conflation, if they can make you think that the financial regulators is stepping in to do something that, let's say, the EPA should be doing, that people will push back against that. Is that what the SEC is doing here? Are they trying to set climate policy?
No, I mean, honestly, just to say one thing, which is like, isn't it crazy how just saying the word climate has this like disgusting connotation between it, No, I don't think, look, yes, is there some element in which this is going to have more clarity around carbon emission and more clarity will have potentially a more positive impact on how we understand climate, how companies are engaging with climate? Sure, that could be a byproduct. Right. Is this what the SEC is coming in primarily to do? No. I mean, you start to look at risk. The SEC's job is to look at risk. If you look at credit agencies, like I think people also misunderstand ESG. ESG is a form of risk. It's saying, look, do I want to take a risk in this investment? Am I informed in their governance risk, their social risk, and their environmental risk? We have these forms of credit risk amongst creditworthiness, banking institutions, all of this stuff. I don't know how this, doesn't make sense from a risk perspective. Bonds are tied to geographical location, municipal bond. Those have impact from, how is the climate shifting, or how is something shifting there? Is a business that operates in that geographical location going to be impacted by XYZ? Right. And are they taking out the insurance around it? Right. Yeah, that's right. And so, I mean, I always find it funny. I think ESG is very misunderstood, and it's become like the boogeyman and evil words. And especially you hear often like this idea that, oh, well, how can an oil company have a higher ESG rating than Tesla, for example, right? Like that's one of the most common criticisms of it, right? And I think what people often forget is that there are actually 3 letters. It's too many letters, Dave. People can't keep up.
You're gonna miss the last 2, right? they're like, oh, it's just the E, but there are 3 letters, right? I mean, it's E and S and a G. This isn't controversial, right?
Wait. I'm kind of seeing a pattern. ESG 3 letters, SEC 3 letters. Is there something we're just not seeing here?
These are all TLAs. You know what TLA is?
No.
It's a 3-letter acronym. Come on. I know all the TLA.
I'm not part of that group. I'm not
WTF. So ESG. There's this really important one. G. I wish. Okay, when we're cutting this up, like let's get the Sesame Street cuts in here, right? Like this is.
You bring up actually an amazing point. Okay, so in the past. If you can imagine this far back, but pre-2022, most of the shareholder votes that were going towards companies were governance focused. It was things like board related and shareholder rights. Okay, those dominated the votes like 2 to 3x more than anything else.
If you care about shareholder rights and shareholders being involved in the governance of a company, you care about ESG, right?
So here's the amazing thing. In the past 2 years, for the first time in history, climate issues have been proposed at more shareholder meetings than both the board related and the shareholder rights stuff.
Wow.
Yeah. So this is the first time. So even investors, it's not just like, okay, these Republicans and all this stuff, they want to create a boogeyman. It doesn't matter. And I'll actually talk about where I think there's some commonality between Republicans and Democrats in the shareholder voting space. But the investors themselves are putting these proposals forward because they recognize the risks. Right. It's pension funds, it's huge index funds that have invested billions, if not trillions, into these companies. And so they're trying to steer them in the right direction because a retail investor, we can get in and out of investments a little bit easier. Can a pension, can afford? No. So they steer them towards the right way.
Right.
And in the past, to your points, it's been board related shareholder rights. It's not the case anymore.
Yeah. And I think that's so important for people to understand, right? Is that this is market driven, right? And back to the essence of our securities laws, that companies disclose and investors decide, right? In some places that's called capitalism. And I don't know what else you think it should be. I don't think it should be, some centrally managed, centrally controlled economy. I think markets work when you have appropriate and transparency and disclosure.
Make them democratic, democracy can work if it's democratic.
Yes. And so it's sometimes this stuff is crazy to me. And when you see what I was talking about earlier, this conflation, there's this big, this op-ed piece came out in the Wall Street Journal. And it was with the former SEC chair, Jay Clayton, and the current chair of the House Financial Services Committee, Patrick McHenry. And they came together to say setting climate policy is the job of lawmakers, not the SEC, whose role is to facilitate the investment decision-making process. And so, they're trying to make that conflation. And, it's hard to imagine if they even wrote that sentence with a straight face. Like, could you maintain a straight face writing that? I trust Congress to make climate laws like I trust Ted Nugent to be my pet sitter. Or Mike Vick to watch my pit bull.
No, look, I don't think they can say it with a straight face. And to bring it back to kind of this lobbying efforts and all this stuff, I think there's a lot more here that's happening behind the scene because these conflating investments with, SEC mandated investments with what Congress has to constitute as right for Americans, passing laws on lobby. It's all connected. It's a democratic capitalistic system, right? And the SEC's job, what they're focused on is risk. And that's really all they're thinking about when they're coming out into the markets.
Yeah. Yeah. And so I just think, it's when you see that conflation happening, you can be pretty sure that behind the scenes, you've got some pretty powerful firms and lobbying operations pulling those strings and trying to piss off people and get them angry that someone is trying to increase transparency and increase disclosure.
So I have a theory here. Okay. So there's this bill that was put forward about a year ago on Capitol Hill. And through the grapevine, I hear it's one of the most lobbied bills for the past year. Yet if you Google it, there's very little information on what it actually is. It's called the Index Act.
Okay, tell us about the Index Act.
Okay, so what the Index Act says is they're trying to mandate it such that the big three entities, BlackRock, State Street, Vanguard, et cetera, have to allow for pass-through voting. So the past couple of years, you might have heard Larry Fink coming out talking about ESG as a positive thing. Now he's swinging the other way and saying, it's the boogeyman. I'm not going to use that term anymore. When he came out publicly and he started, to be in favor of ESG, he got a lot of backlash. And you can imagine who he got this backlash from.
Sure.
Surprisingly enough, Republicans put this bill forward. Okay. And what it does is saying you have to mandate pass-through voting. So if you're a big fund manager, you own an ETF and we could talk about how they take the power in those ETFs and what they own. They don't just own the ability to have those securities to, like, you know, collect interest on them for lending them out or doing XYZ.
Yeah.
They also have the right to vote.
Yep.
So BlackRock, State Street, they come into these boardrooms and they can vote 20% plus of certain public companies. And I think that freaked Republicans out. So they're like, look, if this huge BlackRock entity is saying pro ESG and they're going to step into every board meeting that's terrified shitless of these guys, and they're going to say, we're voting positive on climate, votes, the Republicans are like, we need to stop this. Similarly, Democrats did the same exact thing, but in reverse, where they said, actually, we want more democracy. This is a great idea. It's a very heavily supported, bipartisan supported bill. And it's funny, they're both thinking that it's going to benefit their side, just like in the same way when they reduced the voting age from 21 to 18 in the US. So they did that because both sides are like, I'm going to get the younger audience.
Right.
So that's my suspicion is like, look, you can I think that's where it all started.
Okay, so this was a glorious bipartisan bill to check the power of BlackRock and all of these extremely powerful, massive multi-trillion-dollar firms, and it should be the ideal story of Democrats, Republicans cooperating, giving power to the people, increasing democracy.
Yes.
Sounds like a great story. Hallelujah! This sounds great. I'm excited to hear how this turns out.
So it turns out by being lobbied and delayed and lobbied and delayed and removed from the previous Congress and then put into recently with articles sparsely saying they're hopeful that they're going to come to a conclusion. Meanwhile, no conclusion is being had. It's a very simple bill. All it talks about is saying pension fund managers, portfolio managers have a fiscal obligation to go to the end retail investor, the end client, and ask them for their input over the money that they've invested, that they've made living and working in this democratic system, trusting someone else with their money to grow their money, not to dictate their power, not to dictate their voice, saying, we want to hear your voice, right? And it just doesn't pass. It's just stalled on the floor forever.
Amazing.
No media coverage, nothing about this.
Amazing.
Yeah.
And so no one's talking about it. This should be the easiest thing the Congress can do. Demonstrate unity, push the country forward. Nothing.
Silence. And so to your point, what they're doing is they're trying to push against this. They're trying to say anti-ESG, but the truth is that's where the real, power kind of lies. It's in the decision-making process.
Yeah.
Right. And there's all these financial entities that kind of remove people from this decision-making process. So we all feel the heat. We feel what's happening, or we live in towns that are at risk for the way these big, corporations act and change the landscape. Or we make investments in these companies and all of a sudden they go bankrupt because a fire happened and we had no idea that they were operating in a risky place.
Right.
And nothing changes.
Yeah. It's just so crazy to me. It's every time. It doesn't matter how many times I encounter this in the inner workings of government, and I've seen it too many times now. When you see good bills die on the vine because of lobbying, it is just the most corrupt possible system I think you could design. Right? It's wild, and it's like. People are like, well, you can't walk over to a lawmaker with a wad of cash. And well, actually, you kind of can.
Yeah, you
right?
absolutely can.
It's just a campaign contribution, right? Or it's literal cash, right? Or it's a hey, your kid's got a job. Don't worry, they're gonna do just fine, right? It's amazing.
Yeah.
And we just stand by. People just stand by and let it happen, and they don't even know about it because the media doesn't cover it.
Bingo. And so I think, look, you all of this stuff, by the way, like how much does a company lobby, should also be public. Like, look, we're talking about risks and disclosures in the form of climate. And I think at a bare minimum, what the SEC needs to do is they need to step in and standardize this, because there is no alternative path. They need to demonstrate, what's the proper method of reporting,
Yeah, I mean, look already. More than half of the S&P 500 disclose climate risks. 71% disclose emissions, right?
Yep.
And then you get to smaller companies, and it's still 28% of the S&P Midcap 400. And then when you look at what Europe's doing, 50,000 companies are going to be required under EU law to disclose this kind of information, and that includes 3,000 U.S. companies and 1,300 Canadian companies. So, like, here we are. When I always say this. I say this a lot about a lot of issues because I think people mistake certain, when you encounter a decision, you tend to think of it as, okay, I'm going to either decide to do this or nothing. But nothing is not usually the alternative, right? Like, the alternative is we're simply deferring to Europe. You want to let Europe, U.S. companies,
goddamn croissants.
These people don't even have air conditioning. I mean, I got air conditioning. They're sweating their butts off over there. I mean, what are we even thinking? How can you let the European, they're done. They don't care anymore, right? Like, they had their empires. They're exhausted, all right? They just want to sit back and not work and eat big meals that take many hours. And you know what? You can't let them control U.S. company disclosure requirements, frankly.
Yeah. And if we don't, we're going to end up being them and China that's investing, billions and trillions into climate solutions or figuring out how to standardize this information or understanding risks. Like, they're going to start to think about us like that. And that's not, we don't want that. No one wants that.
No, we want to be exceptional.
Yeah.
We're here to be exceptional.
Yeah.
Let's continue to be exceptional.
And look, I think to your point, everyone's already doing this. Majority of companies are already reporting on this risk.
So why is that? Because their shareholders have demanded
yes.
to do it?
So it's twofold. So there's multiple ways you can think about this, and you could put the investor hat on for a minute. Okay. Let's say I want to make an investment decision and I'm a young, either I'm millennial or I understand the future and I understand brands and I understand where we're headed. The brands and the identities that are, getting ahead of ESG issues, right? They're likely going to be the ones that capture the growing wealth base of the younger generation because they're talking about issues that care about, that people care about. They're talking. So, maybe that's going to be a tailwind for them. And so as an investor, I need to know, are they setting themselves up for success, right?
Right.
Or what are the risks and et cetera. And so, the companies that are smart and forward thinking are already disclosing this stuff. They're already getting ahead of it. Some of them are greenwashing, but we're trying to get rid of that at Fennel. But you know what I'm saying? That's inevitable.
Sure.
And even investment firms are knowing what the right direction is by dumping over $2.5 trillion just into these like climate focused funds that, and really what they are, it's not saying look pro climate again. It's just saying climate has risk, and we've started to identify based on the data that we're recording from companies, because we can pay millions of dollars and we have access to different ways to have this, data. Whereas the government should step in with disclosures and make that data standardized and accessible for everyone.
Yeah. Yeah. And again, like, it doesn't even matter why climate is changing. It doesn't matter, it clearly is, like, it doesn't matter why. You can argue that all you want. It doesn't feel like it's an argument even worth having. It's clearly changing. And, it is posing a risk in all sorts of different ways to all sorts of different companies. And again, like, it just goes back to this fundamental premise of the securities laws. They're there to protect investors by making sure companies have to disclose things that can impact the value of your investment. And so as long as you know those things, you can make an informed decision about what companies you want to invest in, right?
Yeah.
Very, very straightforward way, and a very straightforward thing. Now, I read a really interesting article. This isn't in the post or anything we've talked about, but I'm going to bring it up anyway. And I don't know if you saw this. I think it was what Matt Levine wrote about this yesterday.
Yep. Yeah, I saw that one.
Oh, okay, good. I figured you would. So he talked about how some of the effects of climate disclosures are not that these disclosures reduce emissions. It's that they are shifting the production of emissions to private companies.
Yes.
That are less transparent. Yes. And that are less, beholden to disclosure and emission reduction target requirements. What do you think about that?
No, I think this is a huge problem. I mean, like, look, in ESG itself, all these large public companies do that, right? So they will, whether it's offshore labor or, they will do their best to hide, in dirty places. And so if Congress and SEC, and they just want to play this back and forth tug of war in these games, again, no solution is going to be found. Corporations are, already, thinking ahead what their strategies. If they want to play ball, if corporations want to play ball, they're playing ball right now. And if they don't, they're still going to be figuring out ways. If this SEC disclosure passes, this law passes, how can we still hide, our skeletons in some dirty closets?
Right.
But I think that's the next frontier as well. It's like
this is that quote from Jurassic Park, right? Ian Malcolm, he's like, life will find a way. This is like Wall Street will find a way to evade disclosure requirements.
Yeah, I mean,
corruption will find a way.
Corruption will. That's the American dream right there.
All right. Well, this has been great, Daniel. Anything else you want to cover today?
There's just one thing that I think most people should also be aware of is like, go out and vote on your shares, right? Yeah. Go out, because look, some companies will hear you, they will be afraid, and they will start to change their actions anyway. You are owners of these companies, okay? Yeah. Let it be democratized. Let your voice be heard. My concern is careful who you do it with, right? In the Matt Levine post too, they talk about the ways in which like financial institutions and intermediaries can like remove you from the issue, right? Yeah. The one thing I'd like to, say here is your brokerage matters too. Yeah, so if they lend out your
team on this show.
Yeah. And if they lend out your shares, by the way, which most of them, when you sign up for an account, they have the little fine print of automatically signing you up to fully paid securities lending program. They have the right to sell your vote. And so what they do is all of these issues around climate disclosure and risks in companies or governance risks or et cetera, they do the same. And so don't be discouraged by these huge issues. Like, there is clearly power in democracy. There's clearly power in like caring about these issues, being educated about these issues, and doing stuff. And it's clearly been shown over the past 2 to 3 years in multiple ways that a difference can be made. You don't necessarily have to wait for the SEC, but I really hope that they come through in a big way.
Yeah, I think that's always a good point. You don't have to wait for regulators and lawmakers if you have your voice and if you make sure that you take action every possible opportunity. I think that's a great message. So, Daniel, thanks for joining us. And,
thanks,
great luck. Good luck with Fennel and with you've launched the product, so people should check it out and learn more about it at fennelmarkets.com.
Fennel.com and Fennel app on Instagram. Yeah. And thank you for having me. It's been a pleasure, Dave. Like, as always, brilliant mind, brilliant thoughts. I'm so excited by all of this stuff. So thank you for championing like the voice.
Thank you. Likewise. Absolutely. So next week, I think today was a big day actually in crypto. And the judge ruled on XRP, on Ripple. The ruling came out just a couple of hours ago. And the ruling was interesting. So we're probably going to talk about that next week, because according to this judge, Ripple was a security when it was issued, and then not a security when it was traded. That's a completely new interpretation of the Securities Exchange Act, and I am going to talk about that. Maybe we'll find someone to come on and talk about it next week as well. I also want to say, let's all remember the late, great Bob Barker. Help control the pet population. Have your pets spayed or neutered, and especially adopt, don't shop. And join us next week on Let's Talk Markets. Thanks.